The news came on Saturday morning while Europe slept and the markets were closed. Another U.S. citizen was shot dead by federal officials in Minneapolis. Alex Preddy, 37 years old, intensive care nurse at a veterans hospital. The second death in less than 3 weeks after Renee Good on January 7th. The National Guard has been activated. Thousands are in the streets, and Congress is facing a decision that will change everything. In 4 days, federal government funding expires on January 30th, and the Democrats have drawn a line. They will not sign a law that funds the agents who fired these shots. The House of Representatives passed the funding bills last week, but the Senate still needs to approve them. And with Minneapolis in flames, a compromise has become politically impossible. If a Democrat votes for this law now, their career is over. If a Republican votes against it, their base revolts. It's a stalemate written in blood. But this is not just a political crisis. It is a liquidity crisis. And the numbers I'm about to show you will explain why silver just broke through the $100 mark and why gold is recording its best weekly result since March 2020. Let me show you what's really happening, what the mainstream media won't explain. Here's the point I need to make clear right now. There is one factor that will determine whether we experience a controlled retreat or a complete system collapse. But first, let me show you the mechanics of this crisis. The American national debt stands at $38.4 trillion. That's not a typo. The Joint Economic Committee of Congress released the figures last week. The debt-to-GDP ratio is now at 120%, a level that economists have been calling a red line for decades. Janet Yellen, the former Treasury Secretary, recently warned of something experts call fiscal dominance. This means that the debts have become so large that the interest payments themselves have an inflationary effect. Interest payments have just exceeded the $1 trillion mark per year. That's more than the entire defense budget. Every day, $8 billion in new debt is added, $334 million every hour, $5.5 million every minute. The Peterson Foundation, a nonpartisan budget watchdog organization, says that America is accumulating debt faster than ever before outside of a pandemic. And now another shutdown is looming, but this one is different from all the previous ones. Last October, the U.S. experienced the longest government shutdown in its history, 43 days. The Treasury Department was closed. The data agencies went dark. No inflation figures, no labor market data. The Federal Reserve had to fly blind. And now we are facing the same precipice again. What I just showed you, the debt figures, the shutdown mechanics, that's just the surface. That's what I can show in a YouTube video. But there are deeper layers beneath. The exact SOFR data for the last 90 days and what it reveals about banking system liquidity. Which central banks are currently accumulating gold and in what quantities. The critical point at which the paper-silver system finally decouples from the physical market. If you only watch this video, you have the surface. But now let me show you what is currently happening with precious metals. The price of silver broke the $100 mark on Friday, for the first time in history. $102, then $103. The movement is accelerating every day. Trading economics shows an increase of 236% compared to the previous year. Look at the speed. That's the crucial factor. On January 5th, silver was at $76. On January 12th, $85. On January 20th, $95. On January 23rd, $99. And then the breakthrough. That's a $27 increase in less than 3 weeks. Fortune magazine reports that silver has risen by over 150%. These are numbers we haven't seen since the 1970s. The resistance zones are disappearing. The sellers are exhausted. The algorithmic suppression that capped the price for years has been broken. We are now in the vertical phase. COMEX shows that registered stocks have fallen to historic lows while demand has exploded. If you've made it this far, you understand what it's really about. We see the same dynamic with gold. The price of gold reached almost $5,000 per ounce on Friday, the new all-time high. This is the best weekly performance since March 2020, since the start of the pandemic. J.P. Morgan forecasts $5,400 by the fourth quarter, with $6,000 as the long-term target. The World Gold Council reports that central banks continue to buy in record quantities. Approximately 755 tons are expected for this year. China, Russia, India, and Poland are all accumulating while reducing their dollar holdings. And the reasons are the same as before. Panic, uncertainty, flight from the dollar. But this time, it's not a health crisis, it's a crisis of confidence. The dollar is losing ground because the world watches as America tears itself apart. The Greenland threats. Trump said he had a deal, but Denmark disagrees. The tariff wars, 100% tariffs, were threatened and then withdrawn. Governor Walz has ordered federal agents to leave Minnesota. He called it a campaign of organized brutality. The street battles in Minneapolis. A male nurse was shot dead while trying to protect a woman. Videos show that Pretty had his phone in his hand, not a gun, when he was shot. The Europeans are already talking about using their American assets as a strategic weapon. Billions in U.S. Treasury bonds they could withhold. When the dollar is diluted, buy what cannot be diluted, gold and silver, the only assets that don't need a counterparty, the only assets that don't depend on politicians. But let me explain something to you about the speed of this movement. That is the key to understanding. In normal markets, one measures how many days it takes for an asset to reach a certain value. With silver, we are currently seeing something extraordinary, something I have never seen in 15 years of market observation. The jump from $20 to $30 took 144 days. A long struggle. The banks fought for every cent. The jump from $40 to $50 took 39 days. The resistance weakened. The jump from $70 to $80 took only 6 days. And the jump from $90 to $100 took 10 days. Do you see the pattern? 144 days, then 39, then 6, then 10. That's an exponential decrease in resistance. The sellers have disappeared. The short positions are being liquidated. A historic short squeeze is currently underway, driven by physical demand and Chinese export restrictions. China announced new export controls for strategic materials at the beginning of the year, and this also affects silver. Industrial demand for solar modules, electronics, and electric vehicles exceeds production by hundreds of millions of ounces per year, and the acceleration will continue because there is practically no resistance between $100 and $110. Nobody has ever sold at this level. It is blue territory, unknown terrain. And this is where the psychological factor comes into play, amplifying everything. In a crisis, silver behaves like a so-called Giffen good. This is an economic phenomenon where demand increases when the price increases. Why? Because people see the rising price and think the currency is dying. The higher the price rises, the more panic ensues, and the more people buy. At $20, silver was an investment. At $100, it's survival protection. Psychology has shifted from greed to fear, and fear is a much stronger motivator than greed. But let's look at what's happening beneath the surface of the banking system, because that's where the real danger lies. There is a technical indicator that almost no one pays attention to, but which has predicted every crisis of the last 20 years. It is called the liquidity spread, the difference between the SOFR and the IORB rate. SOFR is the rate at which banks lend money to each other, real money, the heartbeat of the private market. IORB is the rate the Fed pays banks to park their money at the central bank, artificial money. In a healthy system, these two numbers move together. The spread should be close to zero. But if the spread widens, it means that the banks no longer trust each other. They are hoarding liquidity. They are refusing to lend money to other banks. They are looking at the looming shutdown. They are looking at the chaos in Minneapolis, and they are saying the risk is too high. We saw this in 2008, shortly before Lehman Brothers collapsed. We saw this in March 2020 when the pandemic broke out, and we are seeing it again now, exactly 4 days before the government may turn off the lights. In a liquidity event, almost everything is sold. Stocks are sold. Bonds are sold. Bitcoin is sold. Anything that involves counterparty risk, anything that depends on another person fulfilling a promise, is sold for cash. But there is one asset class that serves as the ultimate safety net, the last refuge when all other doors are closed: gold and silver. Metals that don't need a credit rating. Metals that don't need a government to function. If J.P. Morgan no longer trusts Citibank, if they no longer accept Treasury collateral, they will still accept gold. They will still accept silver, because metal doesn't need a guarantee. Metal is simply there. That's why we see this divergence. Normally, in a crash, everything collapses, at least initially. But this time, silver is rising while liquidity is drying up. This tells us that the market has already identified the winner. The market knows that if a data blackout occurs and liquidity freezes, the only safe haven lies outside the banking system. What does that mean for you? What should you do this week? This week will be volatile. Perhaps the most volatile week since the start of the pandemic. You will see things that will test your beliefs, headlines that spread panic, price movements that instill fear. There will be moments, perhaps tomorrow morning, perhaps on Wednesday, when the price of silver could fall by $5 in 5 minutes. You'll see a red candle that looks like a waterfall, and the voice in your head will scream, "Sell! Take the profit! Get out before it crashes!" Don't listen to that voice. This drop is a lie. This drop is a bear trap, designed to steal your position exactly 1 second before the real move begins. Remember the velocity data. The market moved from $90 to $100 in just 10 days. This kind of momentum doesn't turn around in a heartbeat. This is the momentum of a freight train. If the price drops, It's only because a desperate bank is trying to cover its short position before the lights go out on Friday. They're trying to shake you out of your position so they can take your place on the lifeboat. Don't give it up. Hold your position. Understand the game. The closer we get to Friday, the more the panic will intensify. On Monday, the market will be worried. On Wednesday, the market will be in a panic. By Friday afternoon, if there is no deal, and with Minneapolis in flames, the market will go into full liquidation mode. Stocks will be sold, bonds will be sold, and that money has to go somewhere. It can't go into cash because the Fed is going to pump trillions into the vacuum of data blackouts. It has to go into hard assets, the only thing that doesn't need a government agency to have value. Prepare yourself. Check your position. Check your physical holdings. Turn off the noise of the mainstream media, because they will tell you until the very last minute that everything is under control. They will tell you the shutdown is just theater. They will tell you the protests will be over soon. They are lying. The system is breaking. The spread is widening. The speed is vertical. The only safe place is to hold your ground. Let the traders trade. Let the gamblers play. You are not a trader. You are an owner. And this week, the owners win, because in the end, it's not who reacts fastest that counts, but who lasts the longest. The clock is ticking. The countdown is on. 4 days until the potential blackout. Subscribe to this channel for daily updates. Share this video with anyone who needs to hear the truth and leave a comment. Tell me, what asset are you currently accumulating? Gold, silver, or both? See you tomorrow with the latest developments from Minneapolis and the markets. 4 days that could change the financial world forever. Stay informed. Stay prepared. This is not a drill. This is not a scenario. This is happening right now. The numbers don't lie. The patterns repeat themselves. And those who are prepared will weather this crisis. Those who are unprepared will wonder why no one told them the truth. You have now heard the truth.